What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. We have Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. The market had quite an interesting end of the week, and we actually made an alert in our Discord server that potentially could have foreshadowed some of what was to come. Obviously, we didn't know it was going to be as bad as it was, but we'll talk about that in the video. If you want access to all of these free resources, such as the Discord server, as well as our Instagram and free swing trade newsletter, all that stuff's linked down below. All we ask in return is that you hit the thumbs up button. Without further ado, let's hop into the analysis. Jumping right into our SPY analysis, there's quite a bit to cover, but we think it's all valuable in understanding how this might potentially play out. So the first two things to pay attention to on the weekly chart is that we have a bearish engulfing candle forming here, completely engulfing the prior week's range. We have equal bodies lining up, and when that happens, all you're going to do is just favor the more recent price data, which sounds so obvious, but in terms of our analysis, what it means is that instead of looking at price to consolidate in this zone, as we mentioned in last week's video, we're just going to accommodate that red candle by expanding the consolidation zone to look something like this. You'll notice I stopped at a very key level, which is the $300 psychological support. It's also the 50 SMA here on the weekly time frame. It's the 200 SMA on the daily time frame. In the SPX cash and ES futures, it is the $3,000 mark. So a ton of eyes watching 300/3000, if you will. And I think the majority of people want to see it play out and get accepted above that level. We'll talk about why on the daily chart in just a moment. But we could essentially see the market do something like this, consolidate, do whatever, go around and balance out in this zone, and it would potentially set up a nice breakout of the balance zone to retest the all-time high. Again, this is picture-perfect play. Again, the key for that to happen would be price acceptance remaining above the $300 mark. The next thing to point out here on the weekly time frame is our Fibonacci analysis. So if we draw in from low to high of the most recent leg up here, all we want to look at is our first point of support below in terms of Fibonacci retracements at the 38.2 level. And you can see if we go from here to that level, SPY could, in theory, in a healthy pullback, continue to pull back all the way into this 283.30 level before we start to worry about, okay, is this getting to be more than just a pullback? So right now, anyone who's telling you that the market is going to crash, that the market's going to go back and retest the lows all the way down here, is simply just not watching the higher time frames here, like the weekly chart and Fibonacci structures. I'm not going to argue with them. Thursday and Friday were pretty nasty days, but in terms of our uptrend remaining intact, completely healthy pullback that we're seeing right now. Dropping it down to the daily to make a little bit more sense of everything that's going on, I want to draw in this support trend line. And hopefully you had this on your chart before Thursday and Friday's action, and you would have known that $300 was such a strong support. But why was it so strong? So one, we had the support trend line right at that level. Two, of course, we have the $300 horizontal price level and psychological support. Three, we have the 200 SMA, which is that green line that's sort of buried in there. And then sort of 3.5, if you remember, on the weekly time frame, that was also the 50 SMA. So 3 or 4, depending on how you want to look at it, things all lining up, providing confluence at this one point. It's sort of no surprise that on Friday we started to see some bouncing there. So that's one thing I wanted to point out. And when you see a bounce start to happen at a very technical level, just know that these are shorter term players. They're not longer term time frame players. If they were longer, they wouldn't have cared that the 200 SMA was there. They wouldn't have cared that that support trend line was there. They would have just kept selling, and it would have been what it would have been. But because we are starting to see a bounce, because we're at such a nuanced level that only really technical traders are paying attention to, I wouldn't be surprised if these are just shorter term sellers that got, this was a liquidation break. They saw that people got too long too fast, started selling the market and capitalized on that. And now that we're starting to bounce here, again, this just is showing me that these are shorter term sellers and no one with any true strength wanting to see this thing completely roll over. So now getting into targets, we want to see this gap fill to the upside if we are to continue to the upside. That gap is between 312.11 and 318.22. Anything higher than that, next targets remain the next gap fill above at 325.16 to 332.12. Again, remember that Thinkorswim is showing us this nice fake wick. There is a gap there. Thanks a bunch, Thinkorswim. And then after that, it's going to be the all-time high. As we talked about in the weekly analysis, does this happen this week or the week after or the week after that? It might take a little while for this $300 mark to resolve and see some price acceptance above, but those are the upside targets, and keep them in mind. To the downside, if $300 breaks and things start to get a little bit more ugly, which, it could happen, but based on what we've talked about so far, I don't think that will be the likely scenario. There is a gap that remains on the chart here, which again, thanks Thinkorswim for the wick that's piercing it, even though it's fake. There's a gap that remains between those two orange lines at 296.89 to 295.65 just about. Anything lower than that, and we're looking at this double top to act as support on the retest from the top down. That's at 294.30 just about. Anything lower, and it's going to be the last gap and the last piece of poor structure we have below from 291.92 down to 286.32. So that is downside targets if $300 breaks. There's some poor structure that remains below that could potentially be repaired if we do see that break. And again, I didn't mention this, but keep in mind the 50 SMA, if this gap starts to fill, 50 could provide some support before it fills all the way. And that's that. But the one key thing, again, just to bring it sort of full circle here, is that if we redraw our Fibonacci retracement levels, go from low of the move to high of the move, and if we remember that we talked about worst case scenario, filling all the poor structure, repairing all that poor structure below us, all the way to 286.32, we're still going to be trading just above our 38.2 Fibonacci retracement, which again implies to us that we are in a healthy pullback, and we don't really have to fear anything getting nasty. As things consolidate and go just above and maybe some wicks start to drop below, we can start to rethink that. But again, just in terms of what we have in front of us at the moment, even if all the poor structure fills, we are still above that 38.2. So we're going to move through the Qs and IWM slightly faster just because we spent so much time on SPY. First thing is that we have an inverted hammer candle that formed outside the upper resistance portion of our bullish channel. That to us was an immediate signal that we were starting to get overbought. Things are getting a little out of hand and we wanted to see some pullback. Again, did we know that we were going to see such an aggressive one? No, not at all. But again, in terms of, as we were talking about, bouncing from very key technical nuanced levels, where did the price start to bounce from? The support portion of our channel here. So again, one more signal to us that these are more likely shorter time frame players and that we could potentially see a bounce to the upside. So targets are going to be a retest of the all-time high here. That's at 237.50. Anything higher, there's a small gap in the chart that was left behind on Thursday's gap down. That's between 244.50 and 243.50. Anything higher is the all-time high, 247.82, but again, our resistance trend line portion of the channel should act as we start to head back up if that's what happens. And if this breaks and we don't see a continuation higher and we see a breakdown rather, we're looking at a move lower than 231.90 to see levels at 227.40. Anything lower is this support portion here at 223.64, and then it's really going to be our 50 SMA on the daily time frame starting to catch up with that level, but in between here and our next support below at 216.80. So IWM, again, gapping down and sort of holding support right at a key technical level. I don't want to keep reiterating the same thing, but shorter time frame players probably bouncing it right here. The gap fill to the upside is going to be the first target, so we have to break above 141.02 before we could potentially fill the gap all the way up to 145.85. After that, it could potentially be a retest of the high in here. That's right around 152.38. To the downside, though, if our trend channel does break and our support portion breaks, we are looking for supports to come into play here at 129.96, so 130 to play a nice round number. 50 SMA is also coinciding with that level, so definitely expect a first touch super support bounce. But if it gives on any sort of retest or second test to go back down into that level, there is a gap to be filled here. Very little resistance or support rather in that area, all the way down to 125.50. Those are downside targets. If that gets nastier and breaks down below, which again, we're not really anticipating, but being prepared for anything, 116.50 is our next support below. So as promised in the intro, here is the alert that we made to the Discord server indicating that there was a pretty big divergence going on between the internals and price action, and when that happens, you're sort of on high alert that, price might not be doing what it should be doing. So all we sort of summed up from that was that we wouldn't be surprised to see more sideways consolidation as opposed to an uptrend, or even watch for some downward movement. So did we know it was going to be as aggressive as it was on Thursday, Friday? No, absolutely not. But we were giving our members the heads up that, it might not be the best time to be putting on a new long position, or it might be a good time to start thinking about some puts for a pullback play. all we were saying was, hey, heads up, things might not be as they seem. So if you want to join something like this, it's completely free. Link down below in the description. We also give away some trading alerts for the first hour or two of every morning. All we would ask for in return for these free services is that you hit the subscribe button on the channel, maybe even give the video a thumbs up. Checking in on Apple to start, you can see we've started to pull back after a nice move and setting a new all-time high up here at 354.77. Right now, everything's going to hinge upon this double bottom that's been in place on Thursday, Friday, right at 335.52. If we can bounce, expect a retest of that new all-time high. Anything higher than that is going to be blue sky levels, so whole and half dollars, as well as any intraday levels that form. To the downside, though, if this does break, we're expecting a retest of the previous all-time high at 327.85. Anything lower than that, we have this consolidation zone that Apple was stuck in for quite a few weeks, and the key takeaway from that one is going to be the 315.42 support. If it breaks, a retest of 303.50 could be in store. Do keep in mind that this 50 SMA will start to creep up and might provide some support in between there on the daily chart, but I think the most likely scenario is that we want to see some consolidation, maybe a retest of that previous all-time high, and to get some price acceptance above before potentially retesting the new all-time high. So on Netflix, we were worried about this head and shoulders playing out, something looking potentially like that, and now the new concern is that the head and shoulders is going to play out like this. So to avoid that, what we need to see is these higher lows continue to form, and we do now need to see a new set of higher highs continue to form. So here are the lows one more time, and we do need to see a higher high now form, and based on our technical mapping, we could be potentially looking at 449.52 or 455.06 if this uptrend is going to remain intact, to the T. But what I think is likely is, the fact that we do have to battle back up through first 420.09 and then 427.67. I think that's the key resistance that'll act this week. That might not happen. If we do see a continuation to the downside, we're looking for a break of that first trend line to go to our second trend line. That could happen anywhere between 410 and 405, maybe even a little bit lower than that. But if that one breaks, we're then expecting a retest of the previous all-time high. So from back here, a retest, which happened here, caused a nice little bounce. That's at 393. So Tesla has continued to be quite the trader after everything that's been going on with the SpaceX successful launch. Right now, what we're focusing on is that the fact that the first gap has filled to the downside. We paid attention to that and caught that in the group chat on Friday. Now there's one more gap that remains, or two gaps that remain below us. The first one closes at 886.44. Next one closes at 833.20. So those are targets to the downside should anything major develop that way. But right now, we are currently sitting at a support trend line. So whether or not we bounce or break, going to have to sort of wait and find out. Tesla doesn't really trade like the rest of them, so we'll see on Monday or early next week. Targets to the upside, if we see a miraculous bounce, is first at 968.99, and then after that, we're looking at a retest of the all-time high up there at 1027.48. Higher than that, blue sky territories are in play. So on Alibaba in last week's video, we talked about this level here playing as a pressure cooker resistance area. If it broke, expecting a nice move up to our next resistance. We got it for about a day, and then the market obviously did what it did and pulled back pretty hard. But what I'm liking about BABA at the moment is the fact that it's consolidating a nice little balance zone. And when we have a balance area like this, we apply balance rules, and the targets become a doubling of the range to the downside or the upside, depending on which way the balance area breaks. So that would put us right at perfect targets. So 226.75 to the upside and 207 to the downside, acting as support here and then resistance up here. So what we're waiting for is a break to see whether or not we want to see them move all the way up, or break and see them move all the way down. The other possible scenarios that could happen here is that we see a fake out where we get partially in here and then trade back down, in which case we are targeting the opposite end of the range down here, and that could obviously hold up for the same, down here where we see a fake out and come down, get rejected, and then see a move back above, in which case we're retargeting that 220.31. So a lot's going to hinge upon here, but these are the four likely scenarios that play out when we see balance. So on Facebook, seeing a very similar thing to what we saw on BABA on, Tuesday, we saw the nice breakout over our pressure cooker top here at 232.22. From there, we had, again, just a few days before the market did its thing, we set a new all-time high up at 241.21, but we have since left a gap above us. So anything higher than that 232.22 level, you can see the gap closes to the low of this candle here, and that's right around 235.50. To the downside, though, if we don't continue in the upwards direction and none of this really plays out, we are looking at our key support and trend line to play at 222.57. If it gives, a nice move down to 214 or 215 just to round it off to a nice number. And then the 50 SMA will be our saving grace in between there. And of course, our $200 mark. To the upside, again, we sort of covered it a little bit in the previous tickers, but whole and half dollars, intraday levels that form into blue sky territories. Very similar picture here happening on Nvidia. Again, here's our balance range. It could potentially break out to the upside and double back up to our all-time high at 380, or it could break to the downside and double to almost our 326.78 support. It's a little bit much to go all the way down there, but one reason why I think it might, if this level does break, is look at all of the touches and all of the pressure that's building up on this 347.41 level. If that breaks, you should definitely expect a nasty move to the downside. Tons of people will have to close out their longs, and then there will be a nice flush because of all of the selling. That should be one thing that's on your mind here with Nvidia, but obviously with prices bouncing off of that level on Friday, we're going to have to wait and see, if it's going to be in play, if we start to break down below it, so on and so forth. But right now, our targets are all mapped out to the up and downside. So Microsoft being one of the strongest of the bunch this past week, you can tell it broke out over its resistance trend line and then got some legs after that, making a new all-time high up here at 198.50. Anything, on the retest of that, there should be a little bit of resistance on the way back up there here at 195.64. But of course, a retest of that all-time high at 198 could be in store if we see a bounce across the market. And then blue sky levels do apply if we get above it. To the downside, though, we are sort of hovering around our support trend lines, almost sort of breaking it almost here. So 187.25 and below, and we're looking for a retest of the low of Friday. That's at 185.15. Anything lower than that, we have support at 182, and then 180 just about. Let's just round it off there. And lastly, potentially the play of the week was Amazon. We talked about for so long how we were consolidating and building up all this pressure in this box. Then once we doubled it, we did have our targets up to the 2,700 mark. So we played that one nearly perfectly and got the breakout as expected. Huge inverted hammer candle here closing on Wednesday, however, giving us a nice pullback for the next 2 days to follow, which of course coincided with the market. So what we're watching for right now is to see whether or not this level holds up here at 25.25. We'll mark in our new all-time high up here at 27.22. And that's going to be it, really. Anything that holds above this, if we get price acceptance above, again, the MO is just that we want to retest that all-time high, and then blue sky territories, whole dollars, $5 marks, $10 marks here on Amazon. To the downside, though, we have supports mapped out for us. We have 24.65.21 as our first one below here. If it gives, then obviously we're just going to keep walking them down. 24.22, 23.61, and then 23.15 is as far as we'll go. So that's going to be it for this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, let me know down below in the comments section. Of course, we can go over the Discord trading alert that I made there in terms of the divergence. If you guys are interested in that, leave the video a thumbs up. If it gets over 300, I can certainly do a breakdown of how that all works. But for now, again, all the free stuff is linked down below in the description, and I wish you a green trading week.